Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Louis, and I'm excited to share today's top stories with you. We have a couple of interesting developments in the financial sector that caught our attention. First, let's talk about Circle, the stablecoin issuer, which has just priced its initial public offering at $31 per share. This values the company at a whopping $6.9 billion, exceeding expectations and showcasing a surge in demand for its shares. The IPO saw the company sell around 34 million shares, with the price coming in above the expected range of $24 to $26. On another note, we're also keeping an eye on the gold loan market, where stocks have rallied between 2–7% after the Reserve Bank of India hiked the loan-to-value ratio limit for gold loans below Rs. 2.5 lakh to 85%. This move is expected to ease compliance and boost lenders like Muthoot Finance, Manappuram Finance, and Default Finance. Shares of these companies have seen significant gains, with Muthoot Finance trading up from its day's low, and similar trends observed in Manappuram Finance and Default Finance. Additionally, the RBI has announced a 50 basis point cut in the repo rate to 5.5% and a 100 basis point cut in the cash reserve ratio. This is the third consecutive rate cut by the RBI this year and is expected to have significant implications for debt mutual fund investors. We'll be discussing these stories in more detail, analyzing what they mean for investors and the broader financial landscape. Our goal, as always, is to provide you with a balanced view of the market, helping you make informed decisions about your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into our middle segment. Today, we're exploring the world of finance and global markets, specifically focusing on the outlook for Chinese equities. Recently, Morgan Stanley's Laura Wang shared her insights on Bloomberg Television, discussing the potential for increased inflows into Chinese stocks over the next 6 to 12 months. According to Wang, a weaker US dollar is expected to have a positive impact on China's stock markets. This prediction is based on several factors, including the declining trend of US exceptionalism and the growing willingness among global investors to diversify their portfolios. It's also worth noting that Chinese companies are making significant strides in technology breakthroughs, which could potentially drive up earnings growth for MSCI China, particularly in the offshore space. Additionally, valuation perspectives indicate that MSCI China is currently trading at a discount compared to broader emerging markets and other regions such as Europe, Japan, and the US. However, it's essential to consider multiple viewpoints and potential risks associated with investing in Chinese equities. The ongoing trade tensions and rare earths dispute between the US and China could impact market sentiment, and investors should remain cautious about these geopolitical factors. In conclusion, while Morgan Stanley's outlook suggests a positive trajectory for Chinese equities, it's crucial for investors to conduct thorough research, consider diverse perspectives, and weigh the potential risks and rewards before making informed decisions. We'll continue to monitor the developments in global markets and provide you with timely updates and analysis. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the ongoing trade tensions between the US and China, and how they're impacting the global economy. As we've been discussing throughout the episode, the relationship between these two superpowers is complex and multifaceted, with far-reaching implications for investors and businesses around the world. One of the key areas of contention is rare earth minerals, which are crucial components in a wide range of products, from smartphones to electric vehicles. China has been tightening its grip on exports of these materials, leaving companies in the US and other countries scrambling to secure alternative supplies. According to recent reports, Several European auto parts companies have already had to stop production due to China's restrictions on rare earth exports. The Japanese automaker Suzuki Motor even briefly suspended production of its Swift car model due to the shortage. This is just one example of how these trade tensions are having a real-world impact on businesses and consumers. Now, it's worth noting that China has recently appeared to ease some export controls, albeit to some European companies. However, industry experts warn that this is insufficient to prevent severe supply chain disruptions for many companies. The European Union Chamber of Commerce in China has stated that its members are still struggling with the export license approval process due to both the time it takes and the lack of transparency. As we navigate these complex trade dynamics, it's essential to remain informed and adapt to changing circumstances. Investors should be aware of the potential risks and opportunities arising from these tensions and adjust their strategies accordingly. In conclusion, the U.S.-China trade relationship remains a critical factor in shaping the global economy. As investors, we must stay vigilant and monitor developments closely to make informed decisions. Remember to diversify your portfolio, conduct thorough research, and always prioritize risk management. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.